Hey there, welcome back to my channel, it's me the Mind Injector. Today, we're diving into the world of electric vehicles, focusing on a company that's been making waves lately, NIO. But here's the kicker. Despite some good news, NIO stock has been falling. What's going on here? Stick around to find out if this is a hidden opportunity or a sign of trouble ahead. Trust me, you don't want to miss this. Alright, let's get into it. NIO, a prominent player in the electric vehicle market, has just received a significant update from JPMorgan. The financial institution has shifted its rating for NIO stock from underweight to neutral. This suggests that JPMorgan believes the company is on a path of improvement. Analyst Nick Lai points to NIO's involvement in the EV battery space and supportive policies from the Chinese government aimed at boosting EV demand as key factors behind this upgrade. However, while this change is positive, it's important to note that JPMorgan hasn't given NIO stock a buy rating. This raises some questions about the company's growth prospects. So, what exactly is happening with NIO stock? Despite the positive news from JPMorgan, NIO's shares fell. The stock is down more than 8%, which can likely be attributed to a broader negative market momentum affecting other Chinese EV stocks. For instance, NIO's competitors, XPeng and Li Auto, are also in the red, although not as significantly. Even so, investors can find some solace in the fact that JPMorgan's stance on NIO is improving. Lai praised NIO's battery-as-a-service strategy, suggesting that it could help drive growth. He highlighted that by lifting the take rate, NIO broadens its addressable market and lowers the entry price point for its mass BEV segment. This includes important volume models like the ES6 and ET5, which accounted for 75% of sales in 2023. While Lai maintains a hold rating for NIO stock with a price target of $5.40, he still sees an upside potential of more than 2%. Other Wall Street banks, including Goldman Sachs and Macquarie, also rate NIO as a hold with even lower price targets. Despite its recent struggles, NIO has shown impressive growth over the past month and remains above the penny stock line. Now, some experts might point out that NIO stock is down almost 40% year to date. That's certainly not encouraging, but JPMorgan isn't counting the company out, and this shift in sentiment could potentially spread. In a capital-intensive sector like automobiles, early-stage financial struggles aren't necessarily indicators of poor performance. The EV sector is projected to grow at a compound annual growth rate of 15.5% until 2032 in the US alone. This growth potential suggests that NIO could produce fantastic results in the long run. NIO will need to make significant progress to reassure investors that it can return to its previous highs. The company is working hard to achieve this, and as Lai highlighted, its battery-as-a-service ventures are likely to be a key catalyst in the coming year. It's not unreasonable to think that NIO stock could spend the coming months making slow and steady progress. In other recent developments, NIO announced the launch of its lower-priced brand ONVO, with the first model, the L60, set to compete with Tesla's Model Y. Priced at around $34,600, the L60 is a family-centric crossover. While NIO sells upscale EV models in Europe, it's still unclear if the L60 or other ONVO models will be available outside China. The company will announce its first quarter 2024 earnings by the end of May or the beginning of June. On May 9, NIO reached a significant milestone by producing its 500,000th car. CEO William Li and iFlyTech chairman Lu Qingfeng shared their enthusiasm for the company's future prospects. This milestone was celebrated at Hefei Xingqiao Intelligent Electric Vehicle Industrial Park, where NIO revealed new models and innovations across various departments. NIO's second manufacturing facility was also showcased during the event, with participants, user representatives and technical workers jointly illuminating a column to mark the production of NIO's 500,000th vehicle. Since establishing its Hefei headquarters in April 2020, NIO has developed key business entities, implemented 12 full-stack technologies, and secured over 8,700 patents. Last year, NIO's revenue skyrocketed to 55.6 billion yuan, a 12.9% increase. NIO is focusing on breakthroughs in powertrain, autonomous driving, and AI to enhance its market share and competitiveness. The company's mass-market car launch is expected to drive significant growth in the coming years. Meanwhile, President Biden plans to set new taxes on Chinese EVs, which could impact the market dynamics. Chinese EV companies have avoided the US market due to a 27.5% tariff, and the higher tariff would further discourage expansion. While this move aims to protect the domestic industry, critics argue that it could hinder innovation and affordability. In the short term, these tariffs won't affect Chinese EV stocks, given their absence in the US market. However, US consumers prefer hybrids over EVs due to their lower prices, and new tariffs on Chinese EVs could exacerbate this affordability issue. NIO stock fell 38% in 2024 due to the global EV industry downturn post-earnings. If sentiment sours, the company, despite being highly valued, could see investors looking elsewhere for growth. The Chinese EV market remains a key growth area for most EV makers, and NIO has a chance to capture significant market share and grow its presence in the mid-price segment. By lowering its production costs, NIO can shine in this competitive market. Before we get into the exciting details, let me introduce you to ONVO Financial. If you open a brokerage account with ONVO and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. NIO's future prospects look promising, especially with its focus on the battery-as-a-service model, the launch of the ONVO brand, and the potential benefits from China's supportive policies. However, investors should be cautious and closely monitor the company's progress. The EV market is highly competitive, and NIO will need to continue innovating and improving its financials to stay ahead. Let's now take a closer look at the factors that could influence NIO's performance in the coming months. One of the key elements to watch is the company's ability to maintain its growth momentum in the face of increasing competition. As other Chinese automakers like Li Auto and XPeng introduce their own lower-priced models, NIO will need to differentiate itself to attract and retain customers. Another important factor is the company's financial health. With significant cash burn and the need for continued investment in research and development, NIO must find ways to improve its cash flow and profitability. The success of its battery-as-a-service model will be crucial in this regard, as it could provide a steady stream of recurring revenue. Additionally, the broader economic environment will play a role in NIO's performance. Factors such as government policies, consumer sentiment, and market dynamics will all impact the company's growth prospects. Investors should keep an eye on any changes in these areas and how they might affect NIO's business. Lastly, it's essential to consider the long-term potential of NIO's technology and innovation. The company's focus on AI, autonomous driving, and advanced powertrains positions it well for future growth. However, it will need to stay ahead of the curve and continue developing cutting-edge solutions to remain competitive in the rapidly evolving EV market. In conclusion, while NIO faces several challenges, it also has significant opportunities for growth. The company's innovative approach, supportive government policies, and focus on advanced technology provide a strong foundation for future success. Investors should carefully weigh the risks and potential rewards when considering an investment in NIO stock. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.